Hey guys, this is Pratik Oswal, founder and CEO of Glide Invest, and we are here to make investing stress free, one financial goal at a time. Hello everyone. So today's topic is going to be 7 important investment goals to consider. So we do believe that goal planning is the probably the best way of investing in the equity or in mutual funds. Goals are extremely important because they help you track your success, they help you keep disciplined, and they also give you a sense of achievement when you've gotten your goals over a period of time. We've also seen is that a lot of people who start investing without any goals tend to lose hope or tend to lose discipline over time. So we do believe that goals are extremely important, and we do believe that everyone should invest for their goals, which can include the following things. So let's look at short-term goals. I would say the most important short-term goal is an emergency fund. This is extremely important because in life, a lot of people might have emergency needs that come up at any point of time, and we do feel that every investor should have between 3 to 6 months of his salary, or roughly half of the year's should be invested in emergency funds. Ideally, the emergency fund should be able to cover half a year's expenses in case you lose a job, or you're taking a break, or if you have a medical expenditure. The second goal is vehicle or cars. Yes, EMIs are extremely popular, but the problem with EMIs is that you're not only paying principal, or you're also paying high interest rates, and because of that, and also by pushing your EMI in the future, in case obviously your future is uncertain, and EMI can be a huge burden. So the best way to, I would say, save for a vehicle is to buy a vehicle, is to save for one from the start. And we do feel that vehicle is an excellent goal for you to save for. I would say plan for 3 to 5 years and try to have a conservative portfolio, because you're only investing for a short amount of time. Well, a home is also extremely important. Most people in their 40s or in their 30s are looking for homes to settle down. And when it comes to homes, we do recommend that you start really early, because a lot of it depends on the type of home and the amount you're looking to invest for the home. We would recommend that if you're buying a home in a short amount of period, then you should stick to safe assets such as debt mutual funds, because they make sure that you're constantly going to your goal very quickly. Some of the don'ts for, I would say, short-term goals such as buying a home in say 3 years time is do not get into the debt trap, because I do feel that a lot of people get into a debt trap very early on, and they end up spending a huge part of their lives just paying off their debts. We would also ask people who are looking at short-term goals to not really have high-risk investments in your short-term planning. So if your goals are maturing in say 3 years or 4 years, we would recommend not having any high-risk investments and to stick to, I would say, short-term debt or liquid or relatively, I would say, safer investments. Let's talk about long-term goals. One of the most important long-term goals that a lot of people have is children's education. And we do believe that when it comes to children's education, especially when it's abroad, make sure that you have an international fund in your portfolio that's investing in the dollar. Because what we have seen is that even though you might get your goal in rupee terms, the dollar depreciates by 2 to 4% every single year. So make sure that your child's education, if you want him or her to go abroad, happens in dollars. So make sure you use international investments prudently for this reason. The most important goal is retirement. So retirement is probably the most common. Most people tend to invest in equity markets because they want to prepare themselves for an age where they will not have any income. And if you're young, then we would recommend investing in different asset classes and follow asset allocation, which means when you're looking at a retirement portfolio, make sure that you are predicting what would your needs be in whenever you retire, and what is the inflation rate at that point of time, and work backwards. When it comes to investing, we would recommend a combination of equity, debt, gold, international funds in your portfolio. Startups or business is also a huge goal that people might have. Some people might want to work for say 5 to 10 years time so that they can collect enough money or have any savings to go out there and launch a company. We do feel that a lot of people who are saving money for their own businesses, especially if the business is maybe 10 years away or 8 years away, can look at equity or mutual funds to save their money. If they're saving for a business which is not really that far in the future, then you can look at conservative and less risky asset classes. People always can also save for a career break. Career breaks are extremely common these days. Sabbaticals have become extremely common. So we do feel that career breaks are also an excellent way of saving for the next 3 to 5 years time. So I think it's very important to create other streams of income for most people, and passive investing is obviously a great way of doing that. So let's talk about some of the do's and don'ts when it comes to long-term goals. When it comes to long-term goals, we would recommend to hire an expert or who can guide you on managing different aspects of your goals in personal finance. He could also help you with taxes and regulation systems to avoid hefty fines. We would recommend to do asset allocation strategy that is across different asset classes, and we would also recommend getting a term insurance policy early in your career. What are some of the don'ts of long-term goals? Some of the don'ts are: please make sure that you are disciplined. Don't forget to check your finances on an ongoing basis. You have to also look at inflation. Most people do ignore inflation when they're looking at long-term goal. Some of the don'ts also: do not invest disproportionately in high-risk options such as small cap mutual funds. Small cap or mid cap can be extremely enticing, but we would recommend that you invest as per your risk profile. It's extremely important. And lastly, do not deviate from your budget. If you have a budget in mind, please make sure you keep to your budget, unless obviously you are making a conscious decision of increasing your budget over time. So I hope you guys enjoy this podcast about some of the goals that you can invest in. See you next week. You can listen to us out here or check out our website www.glideinvest.com. You can follow us on LinkedIn, Facebook, Instagram, Twitter on @glideinvest. If you want to reach out to me, then I'm at Pratik Oswal 88 on Twitter. Cheers and happy investing. See you guys next week.